So now you're growing the fund. Do you have a strategy to deploy more money? Are you going to do the same thing in the same quality, or just going to open up and do a lot of stuff that doesn't, reflect the performance that you had on the initial one?
Hey everyone, this is Prashant and I'll be host of the VC 10X podcast. And today we have Daniel Ibri with us. Daniel is a co-founder and managing partner at Mindset Ventures, an early stage venture capital firm investing in B2B software startups based in US and Israel. In this episode, we talk about investment thesis at Mindset Ventures, growth in fund size over time, factors they look for while investing, how to grow a VC fund, thoughts on co-investing, and a lot more. So without wasting any time, let's dive straight in. Hey, Daniel. So good to have you on the VC 10X podcast. How are you doing?
Hi, Prashant. It's a pleasure to be here. Thanks for the invitation.
It's my pleasure hosting you. And let's straight away hit off with a question. So my first one is that what's your investment thesis at Mindset Ventures?
We invest in early stage Israeli and American companies, so mostly startups that initiated or are generating traction in the US or Israel, mostly in B2B and software companies. So B2B SaaS, US and Israel early stage.
Got it. And why the specific focus on United States and only Israel? Like what's so exciting about these two markets that's not in other markets, in your opinion?
Yes, we started in Brazil, right? I'm Brazilian based in São Paulo and still have very strong Brazilian roots, but now with the distributed team also in Israel and the US. And when we started, we wanted to be the first completely cross-border and international VC firm in Latin America, really connecting the dots between, Brazil and Latin America and the foreign ecosystems, right? And when you think about international, there were two very captivating areas, I would say. One is naturally the US. I think it's the biggest market in terms of tech, VC investments, exits, etc. So lots of things happening there. And if you position yourself as an international VC, you just cannot be out of the US, right? In Israel, we actually started by Israel with a partnership with Microsoft. And Israel has a very strong track record in producing great technologies because of several reasons we can talk about. But on the other side, Israel is a very small market. So this combination between Israel and Brazil and Latin America, like developing very good technologies and great talent locally in Israel and being able to expand that to a big market such as Brazil and Latin America seemed very interesting when we started, and it has proved along over the past years.
That sounds incredible. And I think you're right now investing out of your third fund. Is that right?
Yeah, we just finished investing the third fund. We are now raising fund 4.
Okay.
Already did the first close, so we raised around 20% of the goal already. So we are starting to invest out of fund 4 now.
Amazing. And what's the goal, if you don't mind sharing? For fund
Sure.
4?
So we're aiming to raise around $100 million.
Right.
We have raised around 20% of that already in a few months.
Amazing.
As you know, the market timing now it's a little bit challenging with all the macroeconomic scenarios, but things have been going well for us. The performance of the portfolio is great, so we'll probably be able to raise. It might take a little bit longer than expected, but it will happen.
Yeah, that's amazing. And can you talk about the growth of the fund? Like how big was the fund 1 and then fund 2? I believe the third fund was around 52 million, right? So how has this number grown over different funds?
So we started in mid 2016. So I've personally been doing VC for around 12 years now, but we started Mindset with this idea and thesis of connecting the dots between foreign ecosystems like the US and Israel and Brazil and Latin America in the middle of 2016. And when we started, we decided to kind of bootstrap and do a very small fund to prove the thesis, prove that we were able to get into good deals and expand these companies here, and then ramp up over time, right? So that was the goal, and that's what we did. So fund 1 was kind of a pilot fund. We raised $3 million in 2016. Then in 2017, 1 year later, we raised fund 2, almost like a continuity of fund 1. We raised around 18 to 19 million. Then at the end of 2019, we raised fund 3, which was like the kind of a full-scale fund in the sense that we brought all the team together, established the governance, the process, everything that we are trying to deploy today is what was built until like fund 3. So in fund 3, we raised 52 million, as you mentioned, and now going to fund 4 of 100. So that's kind of the scale over this past 6 years and something on the road with Mindset.
Right. Awesome. I love the growth of those numbers. And besides, like, how has your approach in investing changed over these different funds, if it has at all?
Yeah, great question. So I don't think the thesis or the objective changed. It's still like B2B software, US and Israel and early stage since the beginning. But I think the approach we have in dealing with the companies, the founders, evaluating the process, the criteria, it has, improved a lot over time, right? So as you start investing, you start looking at the hundreds or thousands of companies over the years, you start uh, discovering what you really want to look at in those companies, what you're searching for, what you want to invest in, etc. So we develop a very strong like process and step-by-step approach and lots and dozens of criteria that we look at before making a commitment. And of course, when we started, it was much more like, it was hard to get into a good deal. So whenever you found a good deal with other great investors, great founder, you did it just because it was so hard to, and so much competitive. But over time, as you build your brand, as you build reputation, as founders, recognize your value and everything that you're generating, I think you're able to, get into better deals a little bit easier. So then when you're able to choose, you need to distinguish which deals are actually good or not. So for that, we develop this kind of process and approach. So I wouldn't say the type of company in essence change, but I'd say our approach to analyzing and making a decision actually evolved a lot.
Right. Yeah, that sounds good. And besides, you have mindset right in the name, right? It's called Mindset Ventures. So, and I saw on the website as well that there was a good amount of focus that we believe in the mindset and we are backing founders who have strong mindset and who can bring about change, right? So, what's this approach and what kind of mindset are you really looking for? And how do you judge a founder on this when they're pitching you?
Yeah, great question. So I think initially we want founders that are really committed to like developing, a great company and solving a relevant problem. So that means great company doesn't mean, big company, unicorns, whatever. Of course it can be, and we hope it will, but it's not about that. It's not about just making money. And we think, making money is a consequence. They need firstly to be, in love with the problem they're solving. They really need to tackle something big and make a difference and develop something great and sustainable and that generates benefit for the stakeholders that are connected to this company somehow. So that's one of the things that's very important. So people committed to what they're doing and solving relevant problems. That's not just trying to make money or grow at any cost or become billionaires or whatever. So that's not what we care about. And second, I think we are very strict in how can I say how the founders relate to other people and to the ecosystem and to the environment. So we're very strict about ethics and governance and processes and how they relate and how they care about diversity and all those things. For us, it really matters at the core, not because we are checklisting like does this company have diversity or not, but just because this is what we aim to do as a company. So we want others to aim for that as well. If not, it's all good, but we're just not going to invest in them, right? So we're looking for companies that
Right.
have think like us and really care for those kind of stuff.
And that's a great approach. And besides, besides the mindset and besides it being a B2B SaaS, what are the other things that you're looking for in a company? And at what stage are you coming in usually? And what metrics do you look for in companies while making the investment decision?
Yeah. So nowadays we're joining mostly Series A's or something around it. So we're kind of flexible. So we can do those like bridges, pre-A's, convertibles, post-A's, whatever. The official mandate is anywhere from C to Series B, but normally is like seed plus A is the like 90% of what we do, right? Also because of check size, etc. And what we look at, so first of all, uh, the the team, right? Always the team, great founders, experienced founders, knowledgeable about the space. Preferably not just a single founder, two or three founders that are complementary, have worked together in the past, have experience in that segment that they are starting the company. So this is probably the biggest criteria. Then of course we look at the market. So again, big markets in growth, trying to solve relevant problems, etc., and also to the problems and the technologies and products they're developing, right? So there needs to be some kind of unique approach, unique solution, unique technology to what they're doing just to sustain this, competitive advantage in the short term. And of course, about the stage that you asked, we are looking into early indications of traction. Normally that means revenues, but not necessarily, right? So it's not only about generating revenues, but about product market fit and having customers that buy the product, pay for it, and are confident that it's actually solving the problem they are promised to.
Right, absolutely. And you just mentioned about that co-founder thing being an aspect that you're looking at while investing, that there has to be a co-founder, two or more co-founders maybe. There's this debate all the time, right? There should be a co-founder or a single founder, and why is that good or bad, right? So why do you think that being a single founder, being a solo founder, a bad thing for a company?
It's not. I don't think bad is a good word, but it's just a lot more challenging, right? And that's because this entrepreneurial journey is very, very hard, and it's harder than people usually think when they are outside, and it's made of ups and downs all the way. So if you're alone, it's very hard because you don't have someone to talk to, you don't have someone to challenge your ideas, you don't have someone to bring another point of view, and especially on the downs, right? If you're down, if you're in trouble, if you need help, if you're like depressed or sad, or you need someone to talk to, right? That makes a lot of difference in the ongoing development of the company, especially in the early stage. So I think having at least two or three that can have complementary visions, approaches, ways of doing things can really generate more value and make it a little bit more sustainable and ease the journey a little bit.
Right, absolutely. And while they're pitching, are you talking to all the co-founders on the business, or are you only talking to the main co-founder, the CEO?
At the first pitch, sometimes it's only the CEO, but over time, necessarily we need to get to know all the co-founders and sometimes all the C-level as well, because it's not only the co-founder. Sometimes there's like a COO or a CFO or whatever, and we try to meet at least the C-level, if possible, in person, because that makes a lot of difference. Like eye to eye, going to their office, feeling the vibe and the culture and everything. So this is something we try to do all the time, but it's very important. We don't invest without actually speaking to all the co-founders and all the main executives.
Right, that makes sense. And let's talk about exits, because you have some good and even early exits in the portfolio already, right? So is there a way? Is there a strategy to get these exits and maybe even early in the game? So how do you evaluate for that? That are you considering the aspect that is there exit potential maybe in the 3 to 5 year range for this company? And what is that? Is that something that is discussed in the pitch, or is that just at the back of your mind as a VC and you're not talking about it to the founder at that time?
Yeah, I think it's mostly on the back of my mind because the founders don't have that intention when they start. I would say they all want to like do IPOs or do big exits and be 10 years on the road. But in practice, it's not what's going to happen for most of the cases. And the B2B SaaS actually enables that, right? Because different from like a B2C company that you need to big numbers and accreditations and masses and all that, the B2B SaaS is very appealing to strategic buyers through M&A once they see the value of what you're building, and they can be just like an acqui-hire, just buying the tech, or they can really buy the business in the early stages just because it's much more it's much cheaper than buying later, right? So I think it's something that's definitely always on our mind, and I think that's part of our thesis. Like when you focus on B2B SaaS in those countries, like good founders, strong tech, you're really focusing on being able to generate more liquidity on the portfolio. So there will be those companies that will become really big and will be there for like 10 years, but there are some that will succeed before, be sold. You do a good multiple on your capital in a short time, and then you can start proving your thesis. So it's part of the job. And again, if the founder wants to sell and it's an appealing offer to them, it's very hard for the VCs to just say, no, it's not what I wanted, right? You just need to go with the founder.
Right, absolutely. And one more thing that I wanted to talk about with you is that since you've grown a fund from all the way from 3 million to now raising a fund for more than 100 million, right? So how does this growing the fund actually look like from the insights? So you're starting small, you're starting with a 3 million fund. So how do you grow from that number to a bigger number to fund two? Is that all down to how the first fund performs, or is it something else, or is it all about the network that you build during the first fund that you can bring in during the second fund, or is it about the exits that you get? So what is that about? How to grow a fund from starting small to maybe 100 million plus fund?
I think there's no magic answer here. I think the LPs, right? Whenever you're raising, they are trying to see the results, of course, which you don't have, right? Because the results take time to come. So you may have an early exit, whatever, or some mark to markets of companies that raise follow-on rounds, and you show the equity striking up, etc. But they're also trying to understand how you think, what's the process, what's the approach, what type of companies you're having access to, what's the strategy. So now you're growing the fund. Do you have a strategy to deploy more money? Are you going to do the same thing in the same quality, or just going to open up and do a lot of stuff that doesn't reflect the performance that you had on the initial one? So I think the having the good story and strategy on how you're going to grow, how you're going to deploy, why you need a bigger fund, what's the thesis, why the bigger fund makes difference for you as a team and also for your position in the market, and also showing results and consistency with the thesis and approach you sold, right? So that's all they are trying to look. When it's like 10 years ahead, you can just show and say, hey, my fund was a top performer and everybody wants to invest just because of the results. But until you have the results, I think the investors, the LPs, are trying to look at the trend and what you like, what promise, what's the strategy, what you realize so far, does it make sense, and can it scale for you to be able to maintain the quality and speed with 2, 3, 5 times the size of the fund.
Yes, absolutely. And is it the same LPs doubling down mostly, or is it more like new LPs coming in as you go on raising larger funds?
I think it depends. So we still have a bunch of LPs that are with us since the beginning, right? And over the two first funds, because they were smaller and check size was smaller, so there was kind of one profile of LPs. But as the fund grew and the check sizes, of course, grew, you needed to migrate to more like so bigger or more professional piece. So you go to like the high net worth individuals, to the multifamily offices, to the corporates, etc. Just because the check size are bigger, you have a little bit more track record, then you can sell to these bigger players. So I think it's a natural evolution, right? You don't start with big institutions, you don't end with like high net worth individuals. So you grow the profile of the investors and the LPs over time. But of course, if you have like good individuals at the beginning that have the capacity and like your job, they'll keep going with you.
Yep, yep, that makes sense. Besides, I saw on the website that Mindset Ventures mostly co-invest with some leads, right? Which are like basically top funds that you're co-investing with, right? So, is that a way to de-risk the investment? That okay, they are the leads, so it's and they would have done the due diligence on this one, so we can rest assured that okay, it's going to be a good one, and we can go along them, right? Or is it something else? Is it the brand name that okay, if it's a big investor, they already have a name in the market, so co-investing with them, they're more likely to go for a second round as well, right? So what's the strategy there of not leading the round but co-investing?
I think the so there are several of your points are relevant, but I'll say the most relevant one is about adverse selection, right? When you are a very small fish in a very, very big pond, so like just like US, Silicon Valley, Israel, etc., there are so many players, so much bigger than us and so much more established over time, uh, that we don't want to have the presumption of, I just got here, I'm the best VC in town, I want to get into the best deals. I can even be, and I really consider we are better than some of these big funds in some capacity, not in all the senses, but in some senses, there are some things that we can do that they can't, and vice versa, right? But I don't assume founders will just automatically recognize us for that. So having someone like a brand name or a big name fund on the cap table just shows that it's not adverse selection. It's not that Mindset found the deal. It's just we found the deal, we assessed the deal, we did our diligence. So it's all independent. It's not just like a blind check just because someone is investing, but having someone like those guys investing is just like double diligence. So it's less risk because of the analysis. And also because if they are getting in, it's not I'm not the only smart guy who thinks this is a good company. There's another great guy who thinks so. So it's about diminishing risk when you join.
Right, right. Yeah, that's a great approach. Yeah. And let's talk about value add. So how are you adding value to your portfolio companies?
So we created early last year a value creation team. So now we formalize that by having so far 2 people fully dedicated to that, and we try to be very respectful of the founders' time, but also be very value add whenever they need, right? So they have to nudge us and ask for help, and we have a process and a way of doing that. But we try to be helpful in many areas. So from like helping them recruit, helping them sales and open doors with potential clients, international expansion, fundraising. So we go all the way. For instance, if they are raising a round after hours, we can help them like doing pitch training, preparing the deck. So we do a lot of like market research. So we really, are hands down with the companies. And one of the things that I think that is the main differentiation, it's not an obligation for all the companies, it's our very strong presence in Brazil and Latin America, right? So whenever one of these companies aims to expand here and sees the opportunity, we are really able to get them here and open doors with potential clients, help them build the team locally, establish the branch, go through the legal stuff. So this is something we did for 20% of our portfolio already is doing business in Brazil. So that's pretty relevant.
Right, absolutely. Yeah, that's a pretty unique value add as well that I don't see a lot of VCs doing value add with. That if you're going for the next round, we are also going to train you for how to pitch, and we are also going to help you with the deck, right? So those they obviously there are introductions and all that is always there, right? But then if you're really getting down to the nitty gritty, training the founders that what VCs really want to see in your business, and then training them as per that, that really helps them raise better, right? All right. Yeah. Besides talking about the VC landscape in general, right? And right now we are amid a downturn in many ways, right? The market has kind of slowed down. But is there a change that you wish to see in the VC landscape?
I think the biggest change that I want to see is more concern about the product and the technology and the difference they're making, and less concerned just about making money and valuations. So I always say that I don't like seeing my business as part of the financial industry, especially in the early stages, right? Because it's much more than money, and money is not being generated at the early stages, honestly. So it's about creating good products to tackle great problems in big markets, and putting a good team together, developing new technology. So it's about it, and all the valuations and the metrics and the money and all that will come as a consequence, right? And I think we've been through a time, because of the amount of liquidity in the world, that everybody was just concerned about investing, making money, upsides, valuations, and unicorns, etc., which is also good and part of the game. But it's not about that, right? It's about building great companies with great people, and that's the consequence. So I think kind of a reshift on the perspective of the market would be very, very productive for everyone.
Right. Absolutely. That'll be great. Now let's shift our focus to the last section of this episode, which is the rapid fire round. So here I'll ask you 5 quick questions about the fund, and you have to give 5 quick answers. Sounds good?
I'll try. Let's go.
All right. So the first one is, what are the sectors and regions you invest in?
Regions, US and Israel. Sectors, pretty agnostic on the B2B SaaS. So very quick example, we did like a lot in fintech. We did like typical AI ML SaaS. We did insurance. We did digital health. We did agro. We did cyber. So pretty agnostic on the B2B SaaS only.
Okay. And what's the typical stage you come in?
Typically close to Series A. So we do anywhere from C to B, but around A or between seed and A is the sweet spot.
And what's the typical check size?
So nowadays, between 1.5 and 3 million when we join, plus follow-ons over time. We can go a little bit lower or higher depending on the case.
Got it. And if there is a direct way for founders to apply, where is that? Apply for funding.
Yeah, they can apply through our website directly. We're pretty responsive. They can write me directly if they want at Daniel@mindset.ventures. So pretty easy, 3 words. They can ping me on LinkedIn. I try to be very responsive as well. So feel free to reach out. If you're a B2B SaaS US or Israel with traction, I'll be happy to take a look.
Absolutely. And the last one is that where can our listeners follow you?
So mostly LinkedIn. I think that's the best platform. I'm one of the VCs that is not so much attached to Twitter. So I'm not active at all. Don't go there. Follow me on LinkedIn. I post quite a few things. So that's the best channel.
Amazing. Yeah. Very few VCs say that, okay, I don't like Twitter that much. Come to me on LinkedIn, right? Brilliant. I'll make sure to plug all those links in the show notes below so that our listeners can get there easily. Thank you so much for coming on, Daniel. I love the work that you're doing, and all the best with your fourth fund and going above 100 million this time. All the best
Yeah,
and
thank you very
happy.
much, Prashant.
My pleasure. Thank you.